What's up, everybody? This is Sunko, the Korean bro. Today is 2022, December 31st, the last day of 2022, and this day would never come back. Happy New Year, everybody, and Happy New Year, Sunko. Hmm. And Happy New Year to everybody who watches this. Hmm. Uh, let's look at stock market, as always. Hmm. Let's try to find something interesting tonight. Hmm. Let's just look at some articles about Kathy Wood first, because ARK Investment Fund um, has done terribly this year, and I also invested some of money into the companies that she recommended, but so far it's not so good. But we all know that we invested into something that's that has potential in the future. So we'll have to see what's gonna happen uh, a few years later, right? Uh, but just for fun, let's look at these 10 stocks that she's been paying attention to. Okay. Kathy Wood, CEO and founder of Art Investment, says she invests on a 5 year time horizon. 5 year time horizon. Okay. Um, Batting big on speculative growth names such as Tesla, Roku, Zoom Video Communication, Exact Sciences, Shopify, but in 2022, at least ARK's 10 biggest holdings plunged. Hmm. And Exact Sciences was the biggest holding across ARK invested various ETFs at the end of 2022, followed by Zoom Video Communications, UiPath, Square Parent Block, and Tesla, Roku, Shopify, Telehealth, and Twilio, and Beam Therapeutics round out Kathy Wood's 10 largest stock positions. Hmm. Teladoc leads ARK declines from all-time highs. All of ARK Invest top 10 stocks were down even more from their record high set in 2020 or 2021. Roku stock has crashed 92% from its February 2021 peak. Exact Sciences off 69% from all-time levels in January 2021. On average, these 10 top ARK investment holdings are off nearly 82% from all-time highs. Uh, Kathy Wood as losers. Kathy Wood and Art Invest didn't buy right at the top on all these stocks. She prefers to buy on weakness and sell on strength. She substantially weighted down Art Invest Tesla's stake, was closer to record highs. Though she has been buying shares aggressive in recent weeks as the EV giant has plunged, still Tesla stock is the only winning position in Kathy Wood's top 10 holdings. Over the past year, Wood has added to Roku, UiPath, Stall, and several others in the past year following a big sell-off. In 2020 and into 2021, word of Kathy Wood taking a new or bigger position in stock would trigger a big advance the next day, but no longer. Some of these top 10 art holdings may amount to a comeback, recovering their massive losses and going on to much higher peaks, but many may not. These companies are in cutting edge fields. Hmm. Okay. Two top growth stocks that could soar 113% to 157% from their 52-week lows, according to Wall Street. The best water utility stock show 2022. These were top three performing large US bank stocks in 2022. This could be a gross margin killer for AMD. Okay. First things first, two top growth stocks that could soar 113% to 157% from their 52-week lows, according to Wall Street. DigitalOcean simplifies cloud computing for small businesses, and it's growing more quickly than competitors like Amazon Web Services and Microsoft Azure. Hmm. Zscaler helps organizations modernize their corporate networks by delivering zero trust security from the cloud. Okay. Sultan Wall Street analysts see triple digit upside for shareholders of these growth stocks. Recession fears caused the stock market meltdown in 2022, and the technology sector was hit especially hard. Notably, shares of the Ocean Holdings and Zscaler have plunged 82% and 72% respectively, leaving both stocks near a 52-week low. But some Wall Street analysts believe that meltdown has created tremendous buying opportunity. Wamsi Mohan of Bank of America has a price target of $60 per share on DigitalOcean, which implies 157% upside from its 52-week low. Similarly, Trevor Walsh of JMP Securities has a price target of $225 per share on Zscaler, which implies 113% upside from its 52-week low. Is it time to buy these growth stocks? Hmm. Okay, 2018. Hmm. Cloud computing for small businesses. DigitalOcean provides cloud services to small and medium-sized businesses. Its portfolio includes infrastructure services like compute, storage, network, and platform services like managed databases and application development tools. Notably, its platform is engineered for simplicity. An intuitive user interface, which click and go options allow SMBs to deploy cloud services within minutes without specialized trading or robust ID support. They differentiate DigitalOcean from cloud vendors like Amazon Web Services and Microsoft Azure. To be clear, AWS and Azure provides a broader range of more sophisticated cloud services, but their products are designed for large enterprises with plenty of technical support. DigitalOcean democratizes cloud computing for SMBs. So, AWS is for a more like enterprise clients, but then DigitalOcean provides services that can be used by small and medium-sized businesses, and uh, it's uh, it's less sophisticated, but then it's really useful. So it's easy for them to use. It's easy for small and medium-sized business owners can use. In the third quarter, revenue increased 37% to $152 million, outpacing AWS and Azure, and the company reported a GAAP profit of $10.10 per share, up from a loss of $0.2 per share in the prior year. Better yet, shareholders have good reason to believe that momentum will continue. Management puts its addressable market at $145 billion by 2025. And there's the ocean expanding its product offering at a steady pace, which should all the way to support more complex use cases down the road. For instance, the company debuted its serverless platform in early 2022. A serverless computing is a pay-as-you-go model that eliminates the need to maintain idle servers, meaning clients only pay for servers when they are actually running. There's the Ocean Oracle acquired managed hosting specialist Cloudways serverless platform. Okay, serverless platform. So when they're not using server, they're not making it run. Pay as you go model that eliminates the need to maintain idle servers, meaning clients only pay for servers when they're actually running. When they actually pay when it's running. Hmm. There's the Ocean Oracle acquired managed hosting specialist Cloudways, a company that simplifies cloud computing for SMBs by handling server configuration support, allowing clients to build e-commerce websites without worrying about the underlying infrastructure. Hosting specialist Cloudways, a company that simplifies cloud computing for SMBs by handling server configuration support. Currently, shares trade at 4.7 times sales, the cheapest valuation since Dish the Ocean went public in 2021. That does indeed create a good opportunity for investors to buy this growth stock. However, the triple-digit returns implied by Mohan's 12-month price target are probably too optimistic in the current market environment. Investors that buy this stock should be prepared to hold for at least 3 to 5 years. And the next one we have is Zscaler. Uh, let's see. Okay, Zscaler runs large network security cloud in the world. Largest network security cloud in the world. Its security service edge platform modernizes traditional corporate networks by handling content inspection and policy enforcement in the cloud. That eliminates the need for costly on-premise security appliances. And all users quickly and securely access corporate resources from anywhere or any device. Zscaler handles over 250 billion lead questions and captures more than 300 trillion security signals on a daily basis. And every data point makes its artificial intelligence engine better at identifying threats. Handles over 250 billion lead quests and captures more than 300 trillion security signals on a daily basis. And every data point makes its artificial intelligence engine better at identifying threats. That unrivaled scale means Zscaler can secure corporate networks more effectively than other vendors. And that advantage has propelled the company to the top of SSC industry. In fact, research company Gartner has recognized Zscaler as a leader for 11 consecutive years. Okay. Unrivaled scale means Zscaler can secure corporate networks more effectively than any other vendors. The advantage has propelled the company to the top of the SSC industry. Not surprisingly, that has translated into strong demand. In fact, 40% of the Fortune 500 uses at least one Zscaler product. And the company has kept its net retention rate above 125% for 8 consecutive quarters, meaning customers are consistently spending about 25% more each year. Fueled by that momentum, revenue rose 54% to $356 million in the most recent quarter. And cash from operations increased 39% to $129 million. Turning to the future, shareholders have good reason to be optimistic. Zscaler supplements its core user protection products with solutions for cloud workload protection and digital experience monitoring. Collectively, that brings its addressable market to $72 billion, but management says the long-term opportunity is even bigger, citing room to expand with commercial organizations and Internet of Things devices. Anyway, Zscaler, network security for platforms. Mm, Okay, Zscaler. Security company worldwide, cloud security company, cloud security company, cloud security company. The zero trust leader, creator of the zero trust exchange platform, uses the largest security cloud on the planet to make a doing business and navigating change a simpler, faster, and more productive experience. Okay. And let's get the next one, okay? This could be a gross margin killer for AMD. AMD's latest Ryzen chips are selling for well below its list price, and its last gen chips are deeply discounted. Intel has the upper hand with Raptor Lake in a tough PC market. AMD missed its gross margin guidance in the third quarter, and the PC business will likely remain a headwind in 2023. On top of tumbling demand, prices for AMD's latest PC chips appear permanently depressed. Advanced Micro Devices has successfully transformed itself over the past 5 years into a formidable player in the CPU market. The company still trails Intel in terms of market share, but the days of AMD being run over by its larger rival appear to be over. Successfully transformed itself over the past 5 years into a formidable player in the CPU market. Hmm. With that success has come greatly improved profitability. Before 2017 and the first iteration of its Ryzen PC CPUs, AMD was largely relegated to be the budget segment of the market. The company now competes across all price points, trading blows with Intel as it goes after gamers, professionals, prosumers, and creative willing drop many hundreds of dollars on blazing fast CPUs. Hmm. Hmm. ASML stock falls in use of Ohio A patent application. Thomas L. Huawei recently submitted a patent application in China for extreme ultraviolet technology. ASM has a huge lead in AUV machines used in producing the most advanced chips. Huawei may or may not succeed in the EVU ambitions, but either way, ASML will be fine. Before panic selling, consider some important items that make ASML such a resilient business. After a strong rally from a multi-year lows in early October, shares of leading chip equipment maker ASML are falling once again, While tech stocks have been selling off in general, in the final days of 2022, ASML shareholders have actual reason for worry. Chinese tech giant Huawei just filed for a patent on the same type of advanced chip making equipment ASML has a monopoly on. Chinese tech giant Huawei just filed for a patent on the same type of advanced chip making equipment ASML has a monopoly on. So Huawei, like ASML, Huawei also filed for a patent on this trend, on this technology. For years, it's been a closely held belief among chip industry insiders that tech researchers and Wall Street analysts that ASML's lead is so great that no competitors will be able to catch up. On the surface, Huawei's patent in China suggests ASML could lose its privileged status, but not so fast. There's a lot more to this story. A patent is nothing more than a legal document. According to reports from a Taiwanese media outlet UDM, Huawei has filed a patent on extreme ultraviolet lithography equipment in China. Currently, actually working in EUV technologies, ASML is room to rule. Though its predecessor technology, which involves deep ultraviolet, has some competition, EUV is incredibly important. It enables the manufacture of chips with transistors just a few nanometers in size. Chip design at this microscopic level are what power our smartphones and high performance computing like AI in data centers. Decades of research and a handful of key acquisitions have put ASML many years in the lead when it comes to EUV technology know how. Hmm. As critical as EUV has become, it's mind boggling complex equipment to develop, let alone to manufacture and operate. Only a handful of companies actually make use of hmm, okay. ASML's EUV setups, including the world's largest chip fabrication company, Taiwan Semiconductor Manufacturing. Anyway, the point is, although Huawei just filed for a patent, it's not going to be easy for them to make technology as sophisticated as ASML because there's a lot way to go, and putting it to use is a different. Putting it into use is a different uh, step. Mm. Kathy Wood goes Barry hunting. Three stocks she just bought. Kathy Wood bought shares of Tesla Motors, Roblox, and DraftKings on Thursday. All these stocks had fallen between 59% and 74% in 2022. Wood has shown a tendency to buy when her largest holdings take a deep. Analysts see Tesla, Roblox, and DraftKings continuing to post double-digit revenue growth in 2023. Tesla. Oh, wow, wow, wow. Okay. Roblox and DraftKings. Roblox. DraftKings, DraftKings, DraftKings. Hmm. Tesla, the company that made electric vehicles cool, finds itself in an unusual place as we tie bow in 2022. Hmm. The same flashy darling that earlier this year had folks waiting months for a new car because it couldn't keep up with demand despite pushing through price hikes finds itself going the other direction now. Tesla began offering buyers um, that took possession of a new Model 3 or Model Y before years and a 3,750 price reduction earlier this month. Last week, it bumped the incentive to $7,500 along with 10,000 miles of free supercharger access. Whether Tesla is trying to clear out a rare glut of inventory or dealing with buyer cancellations on economic or Elon Musk concerns, it's not a good look. The stock is down 65% this year. Hmm. The good news is that analysts still see revenue growing 37% next year, a refreshing break from the sub 4% growth that Wall Street is modeling for the company's two larger automakers by volume. Bottom line forecast for 2023 have been moving lower in recent months, but you can still buy Tesla for a reasonable 23 times for earnings. The Meta platform is down 50%, and recently he bottom. Amazon is down a greater 54% and shows sign of bottom. Hmm. The chatter is that many of these beaten down names are set up to rebound in 2023 and should be on your watch list regardless of the near term outlook. There will be a clear signal when the market is ready to rally the prices these stocks offer and the level of ownership in these names. Hmm. The tide has turned for Meta. Okay. Amazon, the institutions are buying it. Amazon is getting support from analysts and institutions, although that is not yet evident in the chart. The 45 analysts covering the stock have it set at a moderate buy that has held relatively steady over the last year. The price target down 25% year over year on a split adjusted basis is still more than 75% above the current action. And recent activity is firming, if ever so slightly. Hmm. Hmm. Okay, let's see. Mm, I read through a lot of articles tonight, but I don't find any interesting article yet. I'll try to find out in this new website, but who knows? Hmm. The Dow handles beat the Nas in 2022. Here's what history says happened next. Okay, this is it for today. I'm getting hella tired, and it's already 11:50. So I'm gonna see you tomorrow. Okay, bye bye. Bye bye, everybody.